Well, all right. I can't stop laughing. Man, I say Twitter, man, is tough on people. Old Jim Cramer, man. I had to put in my 2 cents a couple times there. He's too funny. Man, that guy, he's always trying to tell people what to do, and then, boy, when it doesn't work out the way people think, they ask questions, and he gets upset. But, it is what it is. All right, so where are we at? Looks like we got a flat day again, right? Too many in a row. Let's see what we got here. 37 up. And we got 196 up. What's that all about? We must got a flyer in there somewhere. Oh, oil stocks. This one's heavy on the oil. Yeah, who cares? Flat day. Flat day. Nobody cares about flat days. Well, it looked like overall we only had 4 sells today. We try to concentrate on those dividend payers. I guess there was a big IPO today. I didn't really follow it, even though I trade a little bit of crypto. Coinbase didn't open where it was supposed to by all the gurus, quite a bit lower, but it doesn't really matter. It doesn't pay dividends, so we don't pay attention to it. A lot of options traders get involved in that kind of stuff. Maybe there's some investors too, but we just stay away from it because they're dangerous. I mean, you're just guessing at that point. Valuations and everything, it's all subjective. Somebody gives you some information, and it might be right, might be wrong. We don't know. We don't care. If it doesn't pay dividends, if you don't see it down here in our charts, we're not interested in it. In the case that, we may want to hold on to it. Looks like this FANG sold as well. This is a pretty popular one that comes up on our scans. It's right on that border, of that $1.20 per year per share. That's what we're interested in. That's our cutoff. Now, I'm not saying we couldn't go if market conditions change and dividends come way down or whatever, but man, they're paying some dividends right now. I don't need to be involved in all the ones that are paying below that. There's a ton of dividend paying stocks, but we like to try to get as much premium as we can. Obviously, the smaller your account, you have to scale your account. If you're trying to play with the big boys and you got, 20,000 or 27,000 in your account, you don't want to be trading it like a, one of your heroes that's got 5 billion or 5 million in his account. He's using a fraction. If he's buying 100 shares, that's the equivalent of you buying one. So you need to put everything in perspective and try to get more occurrences. The occurrences come in the form of trades. Every time you see a blue, that's a win. If you ever see a red, that means we took a loss. Now, we haven't taken a loss in 313 days. We've taken them in the past. It's just we've had good market conditions. But this is what we concentrate on, no losses. And normally how those losses come around in any of these accounts is the company's either bought out or sold or whatever, and they just liquidate at that. Well, let's just take this one here, CHKR. This one could go under at any time. We don't know. So we might get $60 in return, but we'd lose 158. That would show up as a negative, right, in our profit and loss, short term or long term or whatever it is. So you need to keep that, in the back of your mind. Majority of these stocks never go anywhere. I can honestly say that CHKR has been in this account for, I want to say, at least 12 years. It used to be, what was it, Chesapeake? Yeah. I think they put an R on the end of it. No, that's not right. It was always CHKR. They never changed it when it went to the pink sheets. But it's not paying dividends anymore. Or I take that back. It's paying dividend, but it's only, it's not even a half cent per share per year. But that still holds with our philosophy. You don't get rid of it. It's probably paid for itself. I mean, you're only talking $217. Some people would get stupid and say, I'm just going to go ahead and sell it. Well, you'll take your loss, right? Say, well, you could be putting that to better use. I said, it's such a small percentage of your portfolio. Why bother? That's better than nothing. That's probably about the same as you'd get at the bank, you know, because that's not a percentage. Let's actually work that out and see what that is. Because it's pretty sad. So if you're getting 0.0419 divided by 217, multiply that by 100. Shit, you're almost getting as much as the bank. That's like 0.02%. Almost there, but still you're getting something. It's still positive. It's still growing, right? And I don't care how small it is, because if you can't trade this stuff when it's small, good luck trading it when it's big, because just multiply that by 10-fold, right? Now you're at $1,580 because you think, it's not going anywhere. I want to put that money back to work. Let it sit there. Sometimes these things come back. I've seen it happen before. Like, there's another good example. B, I know it's in the B's. It's an oil stock, and oil stocks were hit hard a couple years ago. It's not on that one. I don't know. I got way too many accounts. I'm only showing you a fraction of them here. Where is it? BPT, there it is. So it stopped paying dividends, but it started paying dividends again, and then it stopped paying them again. And this is British, or BP, Prudhomme, whatever. And small amount of money in there, but I think this one was actually paid for. I mean, I think it made its $380 in dividends over the years. So you actually have 113 plus that over the years. So if this was to go out of business and not ever pay dividends again, just come off the board, then you'd be able to get that, take that off as a negative, right? Which would increase the value, or subtract from this, you'd have less. So if you have a positive here, this would increase, right? Your unrealized profit and loss increases with the sale of a positive. So it's just bookkeeping. I play around with numbers. I don't play around with charts. Charts are just for reference only. So when we look at something, well, it's not a good chart to look at. We'll look at AIG. We're just taking something random, right? We're looking at that number right there. What we paid for it is up here. So we're down, right? That's a given. But anything, it's come down about the same distance away from that mean, because your mean, in my opinion, your mean is what you paid for it. Mean isn't what it is right now, because you don't own it. If you don't own it, then how can you call it your mean? You know, this thing is constantly moving. But you stuck your stick in the mud and said, hey, I want to buy it for $48.43. I'm willing to sell it for $50.10, period. That's it. And you start understanding the distance away from the mean. The further away you get, the harder it is to hit, right? So we see here is if you had done a 1-to-1, you would have stopped that. This is why we don't do this. Okay? When we buy something, we buy it for life, or unless the company goes out of business. That's life. Okay? Otherwise, we collect dividends. And we do this on thousands of stocks. But we have a cutoff. You know, like you see this one's actually come down over the years. So we're not buying any more of it, but it's down to 85 cents. It was probably $1.20 or better at one time when we first purchased it. But we don't follow a company's stats. We don't care how much money it makes, but we understand if a company's making something, it has to be making money to pay dividends. Plain and simple. So you don't need any fancy spreadsheets to go in. I know how to read all those things, and they're boring as hell. Whether they're true or not, I don't know. There's been so many people that get investigated for cooking the books. What difference does it make at that point? Concentrate on what you can get. Every company pays something in dividends. It's a dividend paying stock. Now, if you're a speculator and you want to get into growth stocks, you've got no recourse with the company because or I shouldn't say recourse, you don't get anything for holding. If a company is making money in a growth stock, it can put its money back into the stock and grow the price. But if the stock price is going down, something like, let's take a look at Tesla. I think it was down today. Here's where people get into trouble. If you try to use my system by saying, hey, it would be better to be able to scale your position based on how much money you have in your account. But let's just take this for example. We just buy it today. I have no idea where it's going. I'm not going to get paid dividends. I can only afford one share. I can't even afford one share with this size of the account. It's too much. So it wouldn't fall into, it would never show up on our scan for two reasons. It's too expensive and it's not paying any dividends. That's it. That's two of the criteria that haven't been met. So we're looking at it, and what it comes down to is the price would dictate the max shares, and I can already tell just by looking at it through years of experience that because of the price, the max shares would probably be, I don't know, 3, 4, and if you took 10% of that based on the size of your account, 10% of that does not equal one share. So you'd have to probably, if it was 4 shares, you probably have to have at least 200,000 to even think about buying one share. That's just how the risk profile works, okay, or my risk profile works. It works great because I don't lose money this way. So, but here's where the problem lies. Everybody has an ego. $730. Hey, I'm going to buy one share. Where's it got to go for you to make $100? It's got to go to $830, right? It's got to go right up here. Got to go $100 more. Well, yeah, I think it can go there. Well, okay, great. You think it could, right? You could also go $100 lower. It has a 50-50 chance at those two spots, right? Because they're equal distance away. It's a 50-50. You can argue up and down volume. You can argue your chart's got this line on it, and it's got this line on it, and this line on it. I don't care. The fact is, it's got a 50-50 chance. From the time you buy it to the time you sell it, it has a 50-50 chance. So if you're trying to protect your money, you're trying to, you put a stop in here at $100 lower, it's going to cost you $100. So you'd be left with $628. Now you can try again somewhere else, but you said, oh, I'm getting rid of that. So you take a loss. We don't do that. So that's just one example. These are growth stocks, no dividend payments. Or for whatever reason, let's look at BA, because I remember we had those years ago. Yeah, see, they're still not paying dividends. And they've just had a bunch of new orders come in. I come across this stuff, and I was like, well, let's go take a look. Did it come up on the scan? Nope. So it's not paying dividends yet. And there's some other criteria it's got to meet. But if you think this is a high, you're dreaming. Okay? I'm not saying it's going higher. I'm just saying nobody knows what this is. Well, all we know what the price is right now from second to second is what's ticking off. 2151.96 is 93, 91, 92. This is what the price is right now. This is all that matters. Once you realize that if you buy it right now, you get a 50-50 chance. It's not, if it goes higher, that it's going to have a 60% chance of coming down. Any of that. You have no idea. You have to manage your positions. This is not something that happens overnight. This is something that you need to look at on a day-to-day basis, but not be overbearing. You need to realize, hey, this takes time to manage a portfolio. The more money that you have, you just have more positions because you're spreading it out to a point. Once you get up, you start going up through the levels. We just go from in $100,000 increments. Once you get up higher, the only difference is the amount of the max shares that you're using in each position. So if this is under 100,000, we're only using 10% of the max shares that are allowed through the algorithm to buy. This way you reduce your risk in any one position. Don't get caught up in big money thinking that, well, I got to have 100 shares. You don't. You can make money. Some of these move a lot. Look, you can make, this may not seem like a lot, $1.86, but if you hit that 1,000 times a year, it's $1,860. You hit this 1,000 times a year, it's $14,830. Okay, just depends on how many positions you have, number of occurrences. How many times you trade. Obviously, in a market that's getting crushed and it's going down, yeah, you're going to be dependent on dividends coming in, but you're not really going to be buying anything. There will be stocks that don't correlate to the market crashing, I guarantee you. But there'll be a lot less than there are going up, that's for sure. Because everybody's going to be freaking out trying to cover their ass. Oh man, I don't want to take a loss. Well, you just did. Now, people that hold steady and collect those dividends, you're going to be paid. You're going to be paid off well just for holding, because you're going to reestablish at a lower price. And if you don't have a ton of money in, based on the size of your account, what we got here, and this is just the nature of the beast, at almost 18,000 sitting in cash, right? So if this thing was to go in half, right, let's say it goes half in value, so we'd be down to 30,000. You got close to 20,000 to go back in. You might sit there and think about that number for a second. You're putting that back in. What happens to your position? Once you figure out the secret, it's not a secret, and once you figure out how to manage your position, you'll understand not to have too much in any one position. Now, when you get up into the millions and billions of dollars, you come up with your own strategy, but at $1 million, if you just put it into one stock at 3%, you'll make 30,000. Well, where's your risk? In that stock, that one stock. I would rather have thousands of stocks versus one making a higher percentage. What are these portfolios averaging now? 9. So if you had 9%, that'd be 90 grand. Would you rather have 90 grand or 30 grand? That's saying not even trading. That's just pulling in the cash. Who cares what this says right here? Unrealized profit and loss. It doesn't mean anything unless you sell it. Sell a green or sell a red. It's unrealized until you sell it. It just sits there. It only becomes realized when you click that sell button. When this activates, it becomes realized. Maybe one day we'll hit this one. It's been in this account for a while. If it doesn't, we just keep collecting the dividends. We're not worried about what it does. You can sit there and, man, I hope this goes up. But one thing, here's where people make a mistake. They think by buying a few more, that's going to push the price higher. They actually believe that. I don't know how many people I've come across that think that them buying, 10 or 100 shares is going to move the price up. Yeah. Flat week, but still a profitable week. It's still positive. Let's see what we did on the day. We add all this up and we'll put it in our little chart So you can look at it, 364. We only took in 378 for dividend payments. That was, I don't know what the stocks were that paid, because it was sometime last month that they went ex-dividend. They just have a pay date that's in the future, and that date happened to be today. So plus 769 plus 186 plus 345. So consistent, 1664. It must be a new number. I keep seeing stuff like this. Yeah, we hadn't had anything over 20 bucks in 4 days. That's crazy. 1664. So add that in. So we're almost up to $700, but we're working on 9 days, so our average is actually dropping a little bit per day. But you know, we still have what's today, Wednesday, so we get 2 days left in the week. You know, maybe we get that to ramp up a little bit. We'll see. Middle of the month, 15th. You know, like last month, the 15th looks like, well, it looked like the 19th is somewhere in the middle of the month. There's a little bit higher dividend payments, and then yeah, at the start and in the middle. That's where you probably, well, there's another one there, 75. That's not bad for dividends. So, you know, you get that up on these size accounts is what my point. Everything has to be, you have to realize it's the size of the account that makes the difference. Obviously, the more money you have, the more you're going to make. It doesn't, you don't buy a ton of shares and expect to make more money. It's not how it works. People think it does because it's the simplest idea. Everybody gravitates towards it because it doesn't take a lot of brain processing power. And they just, every platform has 100 shares as default. Okay, you can change it on any of these. You know, you can come in here and change that number based on max shares. You need to know what your risk is and how much you're willing to put up per underlying or stock or CEF. I don't mess with ETFs. I don't mess with ETNs. I've gotten burned with them in the past. That's just my experience. You might have a different experience, but looks like Discover Financial Services went positive. Oh, it's been up there before. But yeah, I mean, this is flat. Yeah, we get a couple cells in there. That's great. Keep moving. You know, you keep getting those occurrences. People poo-poo the small accounts. They're like, you just need more money. Of course, everybody needs more money, but let's do it consistently where we never take a loss. If you can make money without taking a loss in the market, you're doing better than 99% of the people in the market, because everybody's taking losses constantly, trying to protect their wealth. People, the billionaires and the millionaires in the market, go to stockgurus.com. I don't have any affiliation with them. Go look up all the people's names there. You know, you got hedge fund managers. Look at their portfolios. Look at what they're doing. They're pulling in dividends. I don't know when they're selling. You're not going to get that information unless you want to pay for it. And even then, it's usually an SEC filing, because for them to unload the kinds of shares we're talking about, they have to let the SEC know what they're doing. It's not like, you know, they can unload 1 million shares in, you know, one click of the button. It could take, you know, weeks. But you'd know it if you were in it, and you'll see it when the market starts going down. I'll guarantee you, if you've been in this for any amount of time. If you're new to this, you just have to be careful. Learn to protect your money. You don't have to use stops to protect your money. This is the key. But the only way you're going to make money is if you've got some skin in the game. And that's through dividends. If you add up, think about it. I've never done it, but I'm sure somebody has out there. Add up all the dividend paying stocks, what they pay on a yearly basis Just add them all up. And then say, okay, I want to own 1 share at every one of those companies. Well, let's just say there's 2,000. Well, that'd be whatever the cost is, right? But if you get $1 from each one of those, on average, then that's $2,000 a year, right? Well, we know there's a hell of a lot more than that. And we know you'd be buying more than 1 share of each based on the size of your accounts. But you know how much money you'd actually have to own all of those? I have no idea. So I don't guess at it. I don't try to predict it, but I bet you there's somebody that's taken that route and figured it out. I would guess it's probably in the hundreds of thousands of dollars, if not more. But they're getting paid dividends all the time, no matter what. No matter what the market does, they're getting paid dividends. You start from that perspective, and you start to realize that all these other get-rich-quick schemes, that's costing you money, it's costing you time. So by the time you figure out that, you know, the only way to play options is there's ways to do it and there's ways not to do it. I use options on larger accounts to, you know, initialize positions, but not in markets like this. So just starting out, I would highly concentrate on, you know, the size of your account. It's real simple. If you got a small amount of money, let's go to a smaller account. I need to start another small one to show people how to start off, because I don't know, I guess learning from seeing somebody do it, some people learn better that way. But let's just say this account has $1,900 instead of $19,000. Same rule applies. If you have $1,900, I want you to concentrate on CEFs. Just go to closed-end funds. Okay. Each week we put out, let's see if I can find it over here. Here's what a list of CEFs look like for this week on our scan. Now these scans are only good, and you know there's other stocks here, but we don't show those until Friday. But what'll happen here if you buy these on the shares, right? Say, okay, 12, you can round that one up. So you buy 13 shares of PCI, and you're making 9.5 or 9.15% on your money for the year. That's the yield. Okay? Same thing applies. I don't care if this has got 99,000. These have to be bought before anything else in the portfolio. Reason being is because of their yield. You can't get this type of yield anywhere else. These things don't move anywhere near as much as the other stocks, and you can tell by their Vega. Now this is quite a high Vega there, and this one is up there too. But if we went and looked at it, main, it's not in that one. Let's look. I know that thing is up. Yeah, well, it came up and just, what did it come up to, 41.99? It hit 42, but there's reasons why it didn't activate. I think I talked about that yesterday. You've got to have enough people buying, and you need to be in the right place in line, because there's probably a ton of sells right at that, because it's a round number. I don't know that for sure, but if you had like level 2, level 3, you could look and see how many orders are actually sitting there. But either way, we're trying to target that 246, right? So we can't buy that on the week. Oh, wrong chart. Let's get that one off of there so we can see this better. So this is the first thing we concentrate. If you're just starting off, you buy these now. Every month you're getting paid. These are monthly payers. So when we look at a chart, why is this main? Okay. So you see on this chart, we're getting 20 cents a month per share. Now, it doesn't sound like a lot, but ask yourself, where am I going to get this kind of yield? Once you get these into your account, there's hundreds of these, right? It's just these happen to be on the scan. There's other reasons why they're on the scan, but we won't go into those details. Just know that these are the ones that the scan promotes as being the most lucrative. And these come out on a weekly basis, and these can be the same, You know, maybe one or two might be on there, maybe just one, maybe none, maybe a whole group, maybe none. Very rare to not see a CEF on these scans. But then you get into the other ones. We cover those more on Friday after the scans are actually complete. Once the market opens, we'll go into what we actually bought and sold off the scan and what came back and what didn't. We're very transparent about our scans. It's just we just don't give the stuff away for free, except for the CEFs. The CEFs, I mean, anybody can look these up. And, you know, they're just a good thing to have in your portfolio because they pay monthly. That's an occurrence. It's quicker. You get your money faster. You can deploy more money quicker, and you'll understand this as your accounts grow and you start trading. You know, because once that money comes in from Maine, we're going to redeploy that into something else for next week when it comes up on the scan. Maybe it's, I don't know, one of these others that we have, and it's down. But just know that if it's over, the reason why we couldn't buy this one again, now back up here, because it's over, price is over our average cost, we couldn't buy this. That's why it's highlighted, is because we actually own it. And we look at it and say, okay, well, just let it go up and make its money. The 246 multiplied by 4, so it's going to be about $11 profit if it ever hits. Otherwise, we're going to keep getting that 20 cents, right? And what do we have, 4 shares? So you can make 80 cents a month, right? And that equals, right now, 5.93%. If that price comes down, the yield goes up, and vice versa. The price goes up, the yield goes down. Dividend is the same. 246 is a good pay. 265, 228. Anything over that $1.20 mark, we're in game. But our rules that we follow, we don't care what the dividend amount is because it's a monthly payer. We want that stuff quick. We want that money paid in our accounts monthly. And once you're into this for a little while, meaning not just for one night, not one day, not 1 month, this is lifetime. Once you get these into your accounts, the only way you get out is to sell them, right? At a profit. You never sell them at a loss. Otherwise, this money just keeps coming in, 80 cents a month. I don't know, you can't even buy a Coke for 80 cents a month, right? But let's just say it just hung out in here. Well, you got the opportunity to buy when it comes down, and you can sell if it goes up. But you have a predetermined target price, and that's the dividend amount. This is what we do. This is not the only strategy we have. We have multiple strategies on how to get in and out, but we like to take profits early. We're not waiting, you know, we're not setting some unrealistic goal. Okay, we bought it at 39.27. I want to double my money. You'll be waiting a lifetime. Okay? These are dividend-paying companies. You say, well, it went from 32 to 39. I was like, okay, well, you're asking to double it from 39 to 78. That's a big difference. Okay? Use your head. You have to think. You have to think smaller. You have to think occurrences. You have to think numbers of times I can turn this thing around and make $11. If you can get $11 times 100 trades, that's $1,100. That's the way you have to start thinking. But yep, that's pretty much it for today. Hopefully somebody learned something out of this. And if you got any questions, just drop me a line at T1 Recon Rider or visit us on Twitter. We put these trades up if we can remember to do them. We stick them on Twitter for the people that follow us on Twitter. Yeah, flat week. But we'll take one more look and see where we're at. So we're up 673 on 3. This is a combination of 3 accounts. So break it down any way you want. Oh, I need to change that chart a little bit because I think we just moved ahead by just a tad. Yeah, just a tad. Can't even see it there. But that'll continue to get better. Let's get that ready for tomorrow. And that's it. So, still a positive. That's what you want to be. Stay positive. Do not take losses. Remember, long term. Don't invest any money that you need to pay a bill. It's not like, oh, hey, I got $500 I got to put in the market. And then you forget. It's like, yeah, I got to pay the electric bill at the end of the month. and you don't have the money, so you sell something at a loss. I mean, that's not smart. You have to get your finances straight and say, okay, after you pay all your bills, how much money can I put in the market? If I can put $1,000 in a year, hey, that's better than nothing. But if you're working and you've got a what do you call it at work, one of those employer, I hadn't worked for anybody in so many years, but they've got some plan, I'm sure, where they're contributing. Say, hey, I'd like to manage that money myself, and would you give that money to me in my paycheck, and you pay your taxes on it, and then you start your own either Roth or some other type of account that you can use as a tax deduction, and that way you can have your money growing tax-free. They call them qualified plans. You need to look into that. Talk to a financial advisor or get online and learn it. I'm not a financial advisor. I'm not going to tell people what to do. I'll show you how to manage money, but I'm not a financial advisor. I will never tell you what to do with your money. I just tell you how to manage money. That's the big difference. So if anybody wants to call me on that, you can call me on that. But anyways, have a great afternoon. See you guys in the morning.